Good morning, traders. Welcome to the TMT Stock Market Strategy video for Friday, April 8th. Had a nice little sell-off yesterday, showing signs that there is vulnerability in our little rally that we had since February, and we did have that rally straight up for the last 8 weeks, and this is the 8th week basically, and things are starting to show signs of weakness. Well, a lot of the gains that did happen, and if you're a day trader, you would know, happened on the opening, and then we did get a couple of little flushes, but nothing big on retracements that you can actually get short and create that high probability trade. So a lot of times you lose that day, but it's okay because you rather lose the day and not lose money rather than having to lose money and then make that money back, right? So I just wanted to let you guys know. However, a lot of volatility starting to expand, which tells me that we're ready to vacate the area. And that's a good sign because that creates opportunity if you know how to trade it. So anyway, this is going to be a short video, but I want to show you the indexes today. And I want to show you signs that a lot of the other major indexes that's in front of you is the S&P, the Nikkei, the DAX, the German DAX, and the French CAC 40, which is a CAC. And you can see that here on your left-hand side. And this is in black, the S&P. You could see that this is just unsustainable. We are looking for a market to retrace. Now, there's a crash or whatever. No, I mean, not with the Fed inducing all of this money and their investment in the stock market of phony money to keep this market elevated. So it's not going to happen. I don't think so. But remember, with the algorithms and a lot of high-frequency trading, this here and we're here in our world markets is not sustainable. Okay, so expect a market to pull back, maybe to 2000. My guess is we're probably looking at somewhere around 1970, 1980, and then we would reevaluate how deep this market will go based on the sell-off that's going to happen. Does it happen today or tomorrow? No. My guess, and this is my forecast right now, from what the technicals are telling me, this is not my opinion. I have no opinion to the markets at all. What I'm looking at right now is we have a tradable low today, tomorrow, which usually happens every options expiration, okay? And then next week, seasonality trends are usually bullish, has a bullish bias to next week. But I think after that, I think you'll see signs of a market really starting to wane and really starting to sell off, okay, the following week. So I think in the next couple of weeks, we'll get a market top. I do think there'll be a lot of chop in between next week, but overall the market ends positive next week with options expiration because, again, we have a lot of funds that write calls and puts, and they want to keep it that way. They want that money. They want that money to expire worthless to the retail crowd, and that's where we're looking at for today. Okay, going in today, I suspect that we have a nice little pop today, and then next week we get some follow-through. But the week after, I believe that the markets will show signs of waning, and the market's just unsustainable. And I showed this to you many, many times where we have a lot of the longs that have been basically caught from November, December's rally, and then we have the lows that were bought from longer-term traders. Let me just get that out of the way. We'll look at the S&P right here. You can see I've mentioned that many, many times, and I'm going to continue to mention it. I get repetitive, but you guys need to know this. A lot of longs caught, and then we have the long buyers that were here, the longer-term investors. What happens when you get up here? The retail guy that is whole now, flat, or maybe a little bit of loss or money, is going to start to sell, and then you're going to have these guys that are going to start to sell. And then we start breaking down, and then this breakdown becomes more of a sell-off, okay? So that's just something that I want you guys to be aware of in the coming days, all right, and weeks. We can see markets are starting to rally. Markets were rallying here, but we have what? We start seeing some crossovers. We have some negative divergence forming as the market was rallying the other day. Now, we did get a little bit of a pullback yesterday, but believe it or not, that pullback was nothing at all. There was no fear, total complacency in the market. I was reading the investor sentiment. And there's something big that's going to be happening here, guys, and I don't know what it is, but you can't have bonds show a move lower with yields moving lower and the markets moving higher and worldwide markets moving lower as well. Eventually, that's going to subside. That's going to crack, okay? and you just can't. It just doesn't work that way. At one point in time, you might get a little bit of correlation, but after that, the correlation will break. So I do believe that the S&P is vulnerable at these levels, and I do believe that in the next couple of weeks we should see a decent sell-off come into play. Again, not until we get through options expiration. But there's the S&P. Let me show you the IWM. And again, you can see the vulnerability. We're stuck here. This is a very big area of resistance. Look at our volume zones. You can see here a lot of supply up above. Can't even get above it. And you have the 200-day moving average, which comes in right in here, not being shown. We have negative divergence forming as we're moving higher. So something's going to give. And believe it or not, I do believe prices will break down. Now, real quick, I had a lot of emails on my gold. Well, I do suspect that as we rally, gold will sell off at one point in time in the next couple of weeks, and I do believe gold will sell off pretty hard. But then gold, to me, I'm a long-term bull on gold. I like gold. I like to buy gold, and it's not because of what I like. It's what I'm seeing in the charts. I really do like it. But when you run up that hard, that fast in gold, you have weak longs eventually going to have to get taken out. And then when that does happen, the gold miners, the silver, and palladium is showing signs, which is the leader in the metals, showing signs of weakness as well. You'll have the gold miner index actually really take a hard fall. But then once that happens, that's when the index should be bought. And of course, I will tell that to you as well. All right, let's take a look at our transports to show you. We were down here, and if I just run a little line here, you'll see that we never made it above it. We never made it above this area. You can see here we failed miserably, and now we lost the 20, we lost the 200, and now we're back here on the 50, barely holding it. So I'll do some retracement work when the time comes to see which way, how far, what deep we're going to look to go once the sell-off really starts to happen. And you can see here, we have our momentum indicators, RSI and MACD really starting to sell off here. Okay. And then lastly is the Qs. You can see here we have our Qs coming into some heavy supply as well. Okay, and this is where I mentioned look out, because at one point in time you will get the market to retrace when you're coming into this heavy area of supply. Okay, hope it helps everybody. Use your stops, please, because the markets are really starting to show signs of breaking down. And that's really about it. Have a great day. Enjoy the weekend, and we'll be back with a full report on Monday. Take care, everybody.